Hello friends, ICAI has released the RTPs, right? So we are going to have a look at the RTP for SFM, our CA final subject which I teach, and believe me, the RTP is taken directly, almost every single question, not almost, every single question is something that we have already covered in the class. So what I am actually going to do now is I am not going to solve the questions in the RTP, okay. I am directly going to give you the illustration number of what I have solved in the classroom, okay. So that is the easiest way because every single question has been solved in the class. So let us go ahead and have a look at it.
To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
So the first question is from security valuation chapter. This is security valuation equities. Rahul Limited has surplus cash of 100 lakhs and they want to do a buyback. This is illustration number 16 from our notes. Okay, I have solved in the class illustration 16. Next one is ABC Limited has 300 million 12% bonds. So this is a bond refinancing question and this is question number 24 from security valuation of bonds. Right. Then we come to the chapter portfolio management. This also, Amal Limited has been maintaining a growth rate of so and so, beta coefficient is so and so. You are required to calculate the expected rate of return on company shares using CAPM model. This is illustration number 19 of what we have solved in the class. Right. Then coming to the fourth one, this is also a portfolio management question. They have given some data about expected return and standard deviation and then also given some beta. They are asking us, which particular security, whether security B is better or security A is better, and this is question number 22 from the illustrations that we have solved in the class. Then mutual funds. Mutual funds, there is a mutual fund ABC Limited which has issued so many units. So, they are asking about Mr. Akash and investor subscribe to so many units, 100 units. What is his annual rate of earning? This is question number 16 from our illustration. Okay, then we have derivatives. Derivatives, I think the first one is an options question. Options question, the first one is illustration number 8 and the second one which is on futures is illustration number 10. These all questions are from the material that I have taught, the notes that are available in Indigolearn, where I have given the solutions for a lot of topics even in Excel sheet, right? So these are those illustration numbers. Next, coming to Forex. Forex, the first one is interest rate parity related question, and this is illustration number 76. Illustration number 76. I think we have solved some 100 illustrations or close to 90 illustrations, right? So this is illustration number 76. Then we have something around swap points and determine the foreign exchange rate, compute the annual rate of premium or discount. This is illustration number 28. This is illustration number 28. Then international financial management, again this is a super simple, super straightforward one. This is illustration number 7. Then you have interest rate management where they are asking you to do something about using a cap option. You are required to work out the interest rate risk, how much of the interest rate risk is hedged, and this is illustration number 12. This is also there in study material, by the way. Then we have corporate valuation where Delta Limited current financial income statement is given, and then they have given details of weighted average cost of capital and asking us to compute EVA and so on and so forth. This is illustration number 34. Finally, MDAY question. This is again a simple question. This is illustration number 29 from the list of our illustrations for that particular chapter. Then they have given a couple of theory questions, explain different types of divestitures and explain briefly how centralized cash management system helps MNCs. Okay, both of these are again fairly simple theory questions. They are directly taken from the material. Okay, so friends, you see every single question has been taken from what we have already solved in the class. Not even a single question is outside of what we have already solved in the class. So believe me friends, I am telling this again and again and again multiple times. You solve all the 500 plus questions that I have solved in the class, there is extremely high possibility that you will score more than 70 or 80 marks. Okay, because 80 marks anyway is practical questions, right? So if you solve all the questions, if you follow stepwise, the process in which I have done and you replicate that in the exam, there is a very, very high possibility that you will score more than 70 and it may be possible you may score more than 80 also. Theory, of course, and nobody can, very clearly say because, it also depends a lot more on you. I have explained you the theory concepts, but, you have to, go through theory frequently and remember and, you should be able to reproduce that in the exam. So this is the simple thing on RTP for CA Final SFM. I hope all of you are preparing very well. Please go through the revision course that we have uploaded on our website. Please go through all the questions, please go through the Excel sheets that we have given, please go through the formula sheet, and I hope to see you very soon on the other side as qualified chartered accountants. Okay, chalo, all the very best and keep preparing well. Hello friends, my name is Sriram and I am your faculty for paper 2 Strategic Financial Management SFM. Here below this line, these are all inefficient portfolios or suboptimal portfolios. But I am telling you why they are inefficient or suboptimal. Why? Because for same level of risk, you are getting higher return in some other portfolios. You will pay 600, get a share back, and that share you can sell in the market at 1000. So each warrant is worth 400 rupees. And how many warrants are you getting per equity share? You are getting 1. So 400 into 1 is 400. So that is the value of that particular warrant. So the value for Zomato, what they are saying is, we value the delivery franchise at 2.5 times FY26 GMV. We are in FY21-22 and they are valuing it at 2.5 times the GMV in 2026 financial year. I will give you enough tools to help you understand a lot of stuff. If you were to revise it frequently, you will remember the key points. We will give you some mnemonics. We will give you some ways to remember, but there is no need to mug up. I believe that we both together can work on all these three things: concepts, practical application, and examination.